next week we start into the heavy duty stuff. We're going to go into corporations, partnerships, S corps, trust. Well, and a lot of the other stuff that'll be similar. You know, expenses and income haven't changed. They don't change from a Schedule C to a corporation. Although there'll be in corporations you do a lot more. Instead of cash basis, you'll be accrual basis. And then there are a few little minor rules you got to follow. Okay, so we're going to start on page 163. They start off by saying you have to have sufficient records. Hopefully all this, guys, is familiar to you guys. Taxpayer cannot produce documents because of reasons beyond the taxpayer's control. The taxpayer may still reconstruct the records to previous deduction. Does everybody here know what the Cohen Rule is? Okay, everybody, nobody heard of it? That's my savior. Okay, back in the, let's say the 1930s or 20s, there was a guy that was a famous singer. He was the most famous, named Cohen. He used to wear blackface. Now you can't do that, I guess. But in his day, he was famous for doing that and singing lots of songs and musicals. Anyway, so he was hated by the IRS, supposedly. He was flamboyant. And so one year he lost all of his records. Somebody stole his car, is what he said. And all my records were in it. And so the IRS goes, aha, we got you. We're not letting you have any deductions because you don't have any proof. They took it to the Supreme Court. I think it was the Supreme Court. It could have been the tax court. Anyway, it has to be the Supreme Court because the IRS acquiesced. Okay, the IRS says, no, that's unrealistic. He lost his records. He can reconstruct. So if you've got a client that comes in and goes, what's a mileage log? Expenses? Oh no, I don't keep expenses. I don't keep no filthy expenses. Receipts. Okay, so you can reconstruct this. The bad news. The IRS is the one that determines what amount is reasonable. So if you got somebody that's a little greedy and they want to say, oh yeah, they look at the ceiling and I go, I spent $20,000 on my supplies. And I go, well, you only made 30 grand. That's really a high amount. And they go, yeah, okay. How about 10? Maybe that's not somebody you want to get some documentation. And that kind of stuff you'd want to also go, all these information were given me by this client. He says he didn't have any receipts. He lost them all. We're trying to reconstruct them as best we can. That's about here. I went to a workshop and I had the lady that's Attila the Hunnis said, I throw them out. If they don't have receipts, I just throw them out of my office. There goes a lot of clients. Okay, so what does it say? You can reconstruct them. The records must be kept available at all times. You got to have them so that the IRS can see them if they ask for them, right? These are things that they're going to probably ask. What happens if, so statute of limitations normally is what, 3 years or 2 years from when you paid the money, right? Okay, so what happens if you underreport by more than 25%, it goes to 6 years. That's a question they ask. They've been asking that one for years. Does everybody understand what I'm talking about? Your income is off by more than 25%, then they have 6 years to audit you. You have a basis of an asset is off by 25%, they have 6 years instead of the normal 3 years. Good afternoon, evening. We'll wait. Make yourself at home. We're telling you that we're going to start the first 2 chapters of the next book next week. All right, is anybody here planning on taking Part 3 anytime in the next few weeks? Then I would suggest if you want to, you call, make an appointment. I'll give you a couple hours and just go over everything for you. Because a lot of you guys haven't been reading the chapters. If you've read all the chapters, there's not much more I can do for you except point this stuff out. There's not really any problems. It's all just answering the questions. This is the easiest. Okay, anyway. Fraudulent tax return, no statute of limitation, that's on there. If a taxpayer, if you don't file a tax return, how long is the statute of limitation? Forever. If the IRS files a tax return for you, then it doesn't start until they finish filing the tax return for you. Worthless security, 7 years. That's about the time limits. How long do you have to keep records when you have basis of property? 3 years after you've already sold it, or when the statute of limitations is up, which is normally 3 years after you sold it. Employment taxes, you need to know this. 4 years. How long do you have to keep the records? At least 4 years after the due date of the tax return or the day that they were paid, whichever is later. But 4 years, they're going to ask you that. What do you got to do? You got to keep all the records that have to do. You paid somebody, whatever you paid them, you got to keep all the records. If you gave them anything, a 1099 income, you still got to keep all that. You gave them a bonus or a Christmas turkey, I guess you didn't have to keep that. Business travel and miles. Taxpayers are required to substantiate business deduction for travel and deductible miles. Everybody knows no log, no mileage rule, which is not realistic because we have hundreds of people that just don't have their mileage. Or I've been telling people they keep doing this for 5 years in a row. You know, what do? And we go, if you don't come in with the mileage log and say to us, I've got a mileage log, you can't write it down. Can we take their word for it? Yes. If they say to you, this is my business miles, these are my total miles, you have to ask, do you have a mileage log? Can you substantiate this? And you need to write down, I asked and they said they have substantiation. If you do that and they make them up in front of you, you could be in trouble. You could lose your license, kind of thing. It's my personal opinion. You understand? So if they come in here and they go, oh no, I think it was 5,000 business miles, 8,000 total. No, you go home and work it out and then come back with numbers and don't make them round.
Also, it wouldn't be covered under the Cohen Rule.
Not really. There's a special rule for it.
What was your question?
What do you call it, the Cohen Rule? Is it reasonable? They have to have something. How did they determine the miles? Oh, it's 20% of my total miles. No, that's illegal. Never let them do that. And how are they going to determine their total miles? What I do is go look, give me your inspection, safety check. It has your miles on a certain date. Let's just make it easy. 6 months ago to the day, your miles were 30,000. Right now, your miles are 35,000. Well, that's a half a year, so 5,000 times 2 is 10,000. Your total miles are 10,000. You write that down, put it in your notes, and keep it. Okay? And then they've got to give you something that says their business miles. Do not let them tell you the number off the top of their head. They have to bring it in on a piece of paper, and my thought is you better make a copy of that. don't let them say, can I borrow a piece of paper? Yes, but you can't write your mouth down. And they got to go to a little extra trouble. There are people that says, look, you're giving up $1,000. I don't care, it's too much trouble. So I bet you all have done that, right? You have regular people that just, they don't want to do it. Until they get audited. Okay. So there's a whole list of employers required to withhold income on wages, what they got to do. The key is 4 years. Business travel, you have to substantiate the time, place, business, all those things. Documentary evidence, okay, is not required for expenses that are less than $75. You still have to have a record of what you spent the money on, but you don't have to have the receipt for every little $10 that you spent. Are you guys okay with that? You're better if you can. Okay, business-related expenses reimbursement are treated as paid under an accountable plan. So, if your boss says to you, I will reimburse you for the business expenses, and you go, great, and you get him, you spend money and you keep all your receipts, you give them to him periodically, let's say once a month or so, and he reimburses you. Then he gets to write off the expenses, you don't have to count it as income. But you got to follow these little rules, and they're going to ask you possibly, these are questions, okay? You get an advance within 30 days, you got to get him the receipts. Expenses are adequately accounted for within 60 days. Okay, so you got to get him the money within 60 days. Excess reimbursement is returned within 120 days. So this applies if he gives you $500 for the month for all your expenses, or $100. And you got to get him back what? He can't. The advance is received within 30 days. He can't give it to you more than 30 days in advance. You got to get him receipts in 60 days. You got to give him the money back within 120 if you haven't used them. Is everybody good with that? Those numbers, for some reason, they like to put those in. Charitable contributions, less than $250. Okay, you don't have to have anything from the charity. All you got to have is a canceled check, a receipt, or something. But you got to have something. There is no more. I put $20 in the plate every week at church, so 50 weeks times 20, I gave the church $1,000. Is there any? There is no. I just gave somebody something I don't have a receipt. Okay. It's got to have the name, the date, the amount. If it's more than $250, what do you got? You have to have an acknowledgement from the charity that you gave it to. Everybody, hopefully you guys know all this, right? Okay. Employers. A person who employs one or more income tax preparers must make a return setting forth the name, identifying number, and place of work. So I have to have a list of, say I have 4 offices, I got to have a list of the name, their ID, and where they work, right? For every tax return. I got to keep it for 3 years. And I got to give it to the IRS if they ask for it. This stuff is sort of simple. A request can be refused. Here we go. Information is provided that the request is of doubtful legality. Good luck with that if the IRS is asking.
Do we have to remember the section codes?
No, probably not.
Yes,
I wouldn't have. And I've pretty much gone through all the questions at the end of this chapter, and I don't remember them doing that. There are some where you do. There's a bunch of them. Okay. Okay, so privilege. We've already gone over this, I think. Whether you're an EA or not, or a lawyer or CPA, you can give tax advice, and that's privileged. But anything you do, let's say you do a depreciation schedule, and that's where you get the depreciation that you put on the tax return. That is not privileged. That you have to give. Okay? On the other hand, it's for taxes. If somebody from Securities and Exchange Commission asks you to give them information, you can't refuse it. Only taxes. And only on a civil matter. So, and they're going to ask you that. It's civil. So what happens if they go, you have a criminal matter? No, you don't get a statute of limitation. Or you don't get a privilege. Okay? Transcripts. I hope you guys know what the 4 transcript types are. Return, transcript, account, transcript, record of account, which is the best. It's got both of them in there. And then wage and income. Does everybody here have e-services yet? It's like better than sliced bread. So if you can get in touch with somebody at the IRS and get permission to have them send you whatever transcript you need, you've got this little secured email thing. They send it over to you. It is great. At first I was going, oh man, they're going to make this so complicated. It's not. The IRS just sends it over. Boom.
You know what I found interesting the other day was this client.
It's redacted though.
Yeah. No, but it's perfect. That's good. But on the CP 2000, I called the IRS with the client, and I called it under the tax preparer. Okay. They switched me over to another agent, and the other agent just took the name of the client, okay, the social, and then asked us to write a letter of something or the other, and then fax it over. They wouldn't solve the client's issue. That was interesting, though.
I don't know what the issue was or why
Right.
they did that.
Yeah.
Was it already in
No, it wasn't in
reconsideration or something?
Right, it wasn't under reconsideration.
Reconsideration is a special set of rules.
Right.
You gotta go, the guy got letters. He didn't pay any attention. He shows up 6 months later or a year later to see you, and they've already gone through the whole process, and he just ignored them. So now, he goes, please, they went to his boss at work and go, we'll take 1/3 of his wages. Now he wants to come get some help. Okay? He did it on TurboTax, and he didn't want to be bothered with these guys. So, you've got to ask for reconsideration. That's part of it. You gotta go to that one department, and then you gotta write them a letter. You gotta explain all what you're doing, and tell them this guy was a jerk. Well, you don't really say that, but you say it without saying it. He did. My way of doing that, this gentleman prepared his own tax return under TurboTax and didn't understand what he was doing. And then he did not answer your letters. We'd like reconsideration. This is all our proof. Now, you can't send in a schedule, just an amended tax return with a new Schedule C on there. You need to put little receipts and everything with all this to get through. Because he was a jerk. Oh, sorry. Personal. All right. Requesting transcripts. You just read that documentation. Documentation can be disregarded after 3 years after the tax return's due date. I personally believe in scanning everything in, especially the W-2s, the 1099-Rs, that kind of stuff, anything with withholding. And I've still got it for 6 years, but that's just, now if we're scanning it in and you're not keeping it in a filing cabinet, keep it as long as you're using the software. The only problem I've got is 6 years ago, I used a different software, and now it doesn't work anymore. Because they've done, you know, too many updates to their software. But that's okay. It's 6 years, I don't have to keep it.
So would you recommend like saving it as a PDF instead of keeping it in the software?
Yeah, that's what, and actually, though that was only for 2 years, and it saved it as a PDF, but in the software. Now the software I have, it has a whole PDF file that's not part of the software, it's a PDF file. It's got all the different people in there.
What software do you use?
Drake. And I like them. I used ProSeries for 1 year. They paid me money to use them. They paid me 10 grand and I still quit after 1 year. That's my personal opinion. And now I gotta pay these guys. What's with that? Okay. We've already talked to you about the IRS up to 6 years, for example, challenge return if they unreported income but 25% or more. Legal documents, proof of live birth must be supported. All of that stuff, fine, just read it, you can do it. Prior. So we're supposed to look at prior year tax return. Is there a law saying we have to? No. Do some of our clients go, huh? Prior year tax return? What's that? Or they did it on TurboTax and they don't remember their password. I just love with our clients. Okay, an income tax preparer must furnish a completed copy of any tax return or refund that he prepared for the taxpayer, either before or at the same time that he gets their signature, right? Everybody hopefully knows that. That's a question they ask all the time. Not every test. Remember, you're not going to get all the questions because there's 1,000 questions in their pool, and they have a computer program where they mix it all up. So you're going to get some out of each chapter, but you won't get all of them.
How many questions on this one?
100 or 120? I can't remember.
On this one?
Yeah. That's why this is so easy. They're not going to be going with gotcha, except for that last chapter we did about taxing authority. You guys, the only thing you can do is just read it and learn it. Okay? A preparer or an employer preparer must keep their copies for how long? 3 years. And it's 3 years, I believe, from July. July 1st.
There's 85 questions.
Huh?
There's 85 questions.
On this one?
How many?
So it's way shorter.
85?
For section 3.
But think of it, okay, so if we had 12, go ahead.
Go ahead. No, go ahead.
If there's 7 chapters and 84 goes into, 7 goes into 84, what, 12 times?
It says practices and procedures is 25 questions. Representation for the IRS is 24. Specific types of representation is 19, and the completion of the filing process is 17 questions. I don't even know why I still have.
But I'm glad you do. For you guys, okay, and remember the first day we told you to go back here and look at this stuff in the beginning on how to study and do everything. So remember you're going to have questions, about 30 questions at the end of each chapter, but you can go online and get a lot more. Take their practice test and see how you're doing. If you go take their practice test and you've got 4 parts down pat, but the 5th part you don't, then go back and study that. Sounds reasonable? Okay. Basic entity support documents. This is kind of simple. Articles of corporation, corporate bylaws, partnership agreements. Do you have to have a partnership agreement? Actually, you don't have to. But if you do, they might ask you about it. Freedom of Information Act does not require the IRS to release all documents that are subject to the Freedom of Information Act. That would make sense. Has anybody heard what's happened to Trump's tax returns? There was something that I missed that just came out yesterday.
Oh,
That,
the Congress is trying to fight what he was trying to do in New York, something like that.
yeah. And New York, the state of New York is also, and some judge went in the favor of New York against Trump.
Yeah.
That
But-
didn't really apply to us.
But I'm concerned because if they can get anyone's return, they can get mine without my permission, or anyone's without.
No, they have to go through a court of law,
Mhm.
and they gotta show why they need yours. In Trump's case, they've got evidence that he filed false tax returns. They've got in 2 different agencies that he filed one amount on this one, and let's just say it is insurance. He said, I paid X, say it was $87,000 insurance on this property here for this reason, because he wanted to have a lower income to pay taxes. Over here, he needed to have a higher income so that he could get a loan. So he cut the fee in half. So his income.
For the same property.
Yes, same property, same time.
Oh.
That's called fraud. And that's what that's about. Now, is that our job? No.
No.
Unless, I would hate to be the people in charge. Because do you think they're getting, just say you're a CPA for that firm, you think there might be some people investigating you? You best not be doing anything sketchy.
Safe, right.
All right. Identity theft. Does everybody know what an IP pin is? 6-digit number. If you have an identity theft problem, then they will issue this to you, and then you put that on your tax return before you can file. Everybody, there's not much there I can tell you.
You get a letter every year.
Yeah, and there's these places, but they've added to that starting in 19. Doesn't apply to us, but for 19 they've doubled it. And I know that I've had a couple of people that want to have an IP pin. They want to have it so that everybody in the nation gets to ask for it if they want it. It's more humbug, but on the same token, it would save you from people falsifying your tax return. Although, if they did it that big, then the people, the little Russian guys that do all this stuff would be able to get in there too. That's maybe. Electronic filing. Okay, so this is, for this chapter, the big kahuna. Oh, does anybody here in charge of electronic filing for your firms? Okay, then you definitely need to know this. Okay, anybody, if you file over 11 tax returns, you gotta start doing electronic filing. The other guys can opt out, your customers, but if it's 11 tax returns, you gotta do it. If you're in a firm that has several taxpayers, all the tax preparers together do 11. You got electronically file. So basically what they're saying is they want everybody to electronically file. If the client chooses, he can opt out electronic filing. If the client chooses to do that, you as the tax preparer or the owner of the company has to keep a written copy of a signed statement, and you have to fill out a form 8948. That's when you need to know. Everybody's done that probably. In a lot of cases, my software gives you a bunch of reasons. We couldn't because this form's not eligible to electronically file. We couldn't because it's more than 3 years late. We couldn't because it rejected because the kid filed his own tax return on TurboTax, and so the parents who support him and he lives at home can't file electronically. But then you have to have that kid come in and amend his tax return. Sorry, pet peeve of mine. Okay. Corporations with 10 million or more in total assets that file 250 returns. This is the question they ask. They're required to file electronically. Partnerships with more than 100 partners are required. Okay, electronic filing originators, EROs, that's what we are, most of us. Okay, that's where the thing starts. So, if I prepare a tax return, am I the ERO? Not necessarily. I could prepare the tax return and give it to that client, and he could take it to another tax preparer and have that tax preparer file it electronically for him. Okay? So you don't have to, but if I do more than 11 tax returns, he has to opt out with me to go somewhere else. What would that be like? One of my former employees went out and started his own business, and 2 years later he was thrown out of electronic filing. This was in the days when we had 8453s. He was not keeping 8453s. He didn't care. He didn't matter to him. He was just, this was 20 years ago. And they did not like that. And so he was thrown out of business.
What would be reasons why you wouldn't want to e-file?
Yes.
Isn't it
I used to have several clients that said to me, I heard that if you e-file, you're more likely to be audited. It's just the opposite. But that was, I didn't argue with the guy. Okay, you don't want to e-file, you don't have to. I don't know. Have you had anybody like that? Okay, so the ERO is usually the first point of contact. Usually it's going to be your preparer, but it doesn't have to be. And what they're saying is it's a separate thing from preparing the tax return as being the ERO. And then we're getting ready to go. In ERO, it must originate the electronic submission only of returns that the ERO either prepared or collected from a taxpayer. So, if I'm another tax preparer, I can't take my tax returns to a different ERO and have him file them. Only the client can do that. The client has to come in, and the client has to sign. Okay? So, the originating electronic submission has a variety of responsibilities. You have to just read all those and know them. Timely, you can't just sit on it. Submitting a required supporting paper documents to the IRS. There's a bunch. Then there's intermediate service providers, reporting agents, software developers, transmitters. Mostly just read that stuff. I can sit here and read it to you, but that's about it. Software, we're going to get later on to get to software developers. EROs have to, I think they'd be fingerprinted, you got to fill out paperwork, do all this. Software developers don't have to do anything because they're not having anything to do with the tax return. They're just developing the software. Online providers or transmitters transmit electronic return information directly to the IRS. And some of those guys are online providers, and all you do is they let the taxpayer use, let's say TurboTax, let the taxpayer use their software, and all they do is transmit it. They're not responsible for the tax return. Okay, on page 171 at the very bottom under 6, under B, the IRS instructed online providers use the following 6 security and privacy business standards. You got to know that. I don't know that it's been on tests in the past, but this year I've gotten more emails from the IRS telling me about security than ever before.
Mm-hmm.
Luckily, I have a son that's really good at that, because they would probably be eating my lunch by now. EROs, intermediate service providers, and other online transmitters must clearly display the firm's doing business as name at all locations. So if your name is Hank's Tax Service, you need to have a sign somewhere saying Hank's Tax Service. An ACA, Affordable Care Act provider, just read that. Didn't make sense to me. E-file provider requirements. This you need to know. We're going to go all the way down to the whole thing. Basically, just read that. Publication 1345. Know that name. That's the handbook for authorized e-file providers. I used to reread it every year. I haven't lately. So if they put some new stuff in it, I might be in trouble. But that's something worth doing. Okay, to be each provider must, this is another one for sure question, be a U.S. citizen or an alien lawfully admitted for permanent residency, be 18. They're going to trick you and say the word 21. Make sure you know 18. Most applicable state and local licensing, bonding requirements. We don't have that in Hawaii. I don't know if you have to be bonded in any states anymore or not, but that's on there. You have to be bonded? Okay. Are we applicable to the New York, California, and other state rules? No. Here in Hawaii, we're not, as long as we don't do over so many tax returns. You have to take CPE and do other things. But we don't have to for California. Okay, you gotta submit fingerprint unless you're one of these other guys. That would be attorneys, CPAs, enrolled agents. Hey, same group. They're also officers of public held corporation and bank officials. But all that is something they might do. A suitability check they're going to do. You got a criminal background check or credit history, tax compliance check. So if you're an axe murderer with bad credit that hadn't filed your tax returns, you probably can't get an ERO number, an EFIN. There we go. IRS doesn't complete suitability checks on software developers. So you can be a bad guy if you're a software developer.
What did you just read?
Huh?
What number?
At the bottom of number on page 173, at the top of the page, number 10, right before 211, IRS doesn't require suitability checks for software developers. That's been a test question before. I don't know if it still is. Everybody gets an EFIN. You have to know what EFIN is. Electronic Filing Identification Number. Everybody gets one. You get one per office. And if you have more than one office, you have to have a different one in each office, generally speaking. I'm sure there's, what do you do if you have a laptop and you go to people's homes? I don't know. I've never done that. People try to get me to do that. I don't. you guys know, there used to be a firm here that was their specialty. They go to your home.
Why don't you do that? Is there liability or?
Security.
Well, but the real reason is you gotta spend a lot of time driving to their home. I'm already working 10 or 12-hour day.
Got it.
Hello? Now, this time of year I could, but then, so you spend an hour to 2 hour working on a simple tax return. Simple being they got a Schedule C, maybe a rental property, but nothing exotic. Well, then you might spend twice that much if you have to book out time to drive over there, drive back.
Can you
And
bill?
it's in Waikele, or no, just say Kapolei, and it's 4 o'clock in the afternoon.
Oh,
Can you bill for your time?
You can do anything, but then all of a sudden, you're having to charge twice as much for a tax return. Those guys do it though. If you only do Kapolei and you live in Kapolei, it would work. I have an office out in Kapolei. I can have maybe my Kapolei people do that. But for me to try to drive out there at 4 o'clock in the afternoon, or my famous one is at 5 o'clock. We stay open till 8 or 4:30. One of my employees go, our printers have gone down. This is before I had my son or any help. This is 20 years ago. I drove through rush hour traffic to get there, and all that happened is they somehow turned off the printer.
Oh.
So I pushed the button, turned the printer on. I
It
remember
happens
that.
to the best of us.
I can't forget it. Nor can I. The lady's still with me 20 years later that did that.
You don't better forget it.
I don't remind her, no.
Good, don't.
Because she's getting close to 70. No, she's over 70, and have already got a pacemaker. So we don't want to kill the employees. Okay. Changes in situations that require revision. That's number 12 on page 173. You need to know when they change. Well, if you change location, that doesn't require anything. But if you change owners, or you get a new principal, or you got a new partner in there, that all counts. If you change functions, if you were a software developer, now you want to be an ERO, that would change, or vice versa. What are the things that you have to do for a new application? The provider acquires an existing IRS e-file business. Well, if that's it, you gotta just do a new application. You're a new owner of the business. Okay? If you had a partnership and you just put one new owner and you still kept all the other people, then you just make an amendment to the application. But if you have a new business, one business buys another, then you got a new application. The real key is, don't ever use the old guy's EFIN. That's a big throw you out of business. I don't think it's in here, but that is. Okay, IRS publication 4600, safeguarding taxpayer information. They've been pushing that for the last few years.
I have a question.
Go ahead.
Provider wants to acquire a foreign infant, so that person will be doing foreign taxes?
No, they will be doing taxes in a foreign country.
So doing
you're in
US
Germany
taxes
and you have to do U.S. people's tax returns. Let's say spouses of military, or military people's tax returns, they don't have a good VITA person wherever they are. I just did 3 tax returns, 3 years for somebody over in a foreign country, Latvia. And one guy has a business in a foreign country. A wife is a military guy, military girl. They sold a property.
In the foreign country?
No, they sold a property in California, but they didn't live in California. And they have different states of residences. Yeah. Okay, so they could have got that done in Latvia. I don't know if there's any tax preparers in Latvia. I basically barely know where it is. It's in the Balkans, above, next to Russia, above Poland. There's 3 little countries up there. Latvia's one of them. Lithuania.
Sounds like Latvia.
On the next to Russia, above Poland, across from Finland.
Okay, been there, no.
Okay, there's another one. If a tax preparer has a website, then he uses the website to take data and to do taxes on, he has to register it with the IRS. If you just have a website and you don't collect information through your website, you don't really have to do that. I have a website, but all it has on it is our information. You can't go to that website and give us information.
How do you register? Like you have a portal where clients can upload their documents. Would that be considered something you have to register?
Is it a website?
Yeah, I guess so.
Then yes, and you would go to your e-services and go on e-services. If you can't figure it, I don't know, because I don't have to do that. I don't let people. I don't really like even letting people give me information over the internet. I just can't stop them. Everybody wants to do it. So, will the Russians get all our documents? Maybe. Maybe not. I don't know. But there's no, it's going that way. It's going to be worse before long. Everybody's going to want to do everything over the internet. You're going to be able to download all your W-2s, your 1099s, and they're going to be sending all you this stuff instead of, I don't want to have to go to the trouble to go to your office. And before long, they're going to have it so you can sign everything. The IRS is going to start taking signatures over the internet, or it'll be a secure internet system. I've already gotten people trying to advertise to me to do that.
I thought IRS doesn't accept digital signatures right now. They want
don't.
wet signatures right
What do you think 8879 is?
Oh, that's different.
That's within the office. but then-
No, the signature.
Your 1040 can't be electronically signed, because I had to email 3 pages for a Virginia tax return for 3 separate years to the guy. He's got to sign them. Then he's got to mail them back to me so I can sign them, put them all together, attach the W-2s, and mail them to Virginia. I thought that was easier than me signing it and mailing it to him.
But there is a special software that came out that people can sign. Right, something. Yeah. The IRS is rejecting that. Right, we had a couple of those rejections.
Everybody know what we're talking about? This is also important. You have to have, on an 8879, we, the EROs, can you have our signature on there? We don't have to actually sign it. The taxpayer has to actually sign it. There is a form of 8879 that the taxpayer can do that he doesn't have, nobody has to sign. He goes and uses his PIN number from last year or his AGI from last year. You ever had some of your clients call you up, what was about last year AGI? And you know they're going on TurboTax or something and doing their tax return this year. But the answer is, if somebody does that, do you give it to them? Hell no. You don't give them tax information when they call you on the phone. You have to do something to verify who they are. I make them email or fax me their picture ID. If you email or fax me the picture ID, then I'll send you a copy of your tax return.
You can can get into a real good argument when they want the information and you say, I'm so sorry, I'm not able to give it to you due to the fact, security.
Send me a copy of your picture ID. Now everybody, they got a phone, they can do that with.
Right.
And, okay, so the Practitioner Pin Method, that's what I use all the time. 8879, I sign it with my computer does it, but then the taxpayer and the taxpayer spouse have to sign it and date it. Those have to be real signatures. Do they have to be on the same 8879? The husband can do it on one, the wife can do it on another, as long as the numbers stay the same. And they could be a different date.
And you need to save a copy for yourself.
Yes, in that case, you'd save one of each. Okay, how long do we have to keep those copies?
3 years.
Okay. Oh, it says it right there. And it says another place you gotta keep until the end of the year. But completed form is retained for 3 years from the return due date or IRS receive date, which is later. So what happens if the tax return was due on April 15th of 2018, but the guy didn't come in until 2020? Then it's 3 years from when he comes in and signs it. Because everybody that comes in now, they're late, right?
Wait, I didn't get the first part of that. Sorry, can you repeat that?
Okay, you gotta have it from 3 years from when the due date or when they actually came in and signed it. So if they came in and they're just now signing a 2016 tax return, then it's 3 years from today, even though it was due a couple years ago. We gotta keep it, right?
So the only thing we need to keep with the client signature is the 8879, not the tax return.
No. We need to keep the W-2s. We need to keep the 1099-Rs at a minimum till the end of the year. And it may be saying 3 years on that. We have to keep a copy of the tax return or certain information on that tax return for 3 years.
I was just asking about signature. Like what documents?
3 years.
No, what
88,
documents?
79 for 3 years.
Okay. So you could save the tax return and just.
But you don't have to have a
client
signed
copy.
tax return. Client copy,
Right.
in fact, I hardly even have signed tax returns anymore. They never sign them. Do you guys do that? I don't think anybody does. They have an 8879, and I personally believe in keeping mine digitally. Keep it, scan and keep it. Or my computer just does it automatically. Okay, 8453, there's a long list of all these things that you have to have. The taxpayer is required to mail in documentation not listed on the 8453. The taxpayer cannot file the tax return electronically. Okay, so there's a whole list of 8453s. All the things that you can think of. The ones that are really important are the power of attorney, the, what else? Release of a kid, 8332. 3115. I think you can, I thought you could always electronically file 3115. I'm not sure, but I think my tax returns, my software lets us do that. Okay, but go with the book. The provider must obtain a copy of the 8453 until the end of the calendar year. So 8453 till the end of the calendar year, and probably the form that goes with it. Filing individual income tax returns using e-file is limited to the taxpayer with prescribed due dates in the current and 2 previous tax years. What does that mean? The current tax year and the 2 previous. So you can e-file 3 years back. Right now it's 18, 17, 16. As soon as the 19 comes out next year, 19, 18, 17. That's, hopefully everybody's got that. I don't know if they're gonna ask you on all of these things on the 8453. I hope not. I wouldn't know them. I know some of them. Fees. This is what you gotta know this one. Okay. If an ERO charges a fee for transmitting electronic portion of tax return, it's gotta be based on it may not be based on the percentage of the refund. It's gotta be the same for everybody. And you cannot charge for direct deposits. Those are questions they're real picky about that. They want to make sure you know. The ERO must advise the taxpayer of the option to receive their refunds, be it either paper check or direct deposit. You gotta say that. By the way, you can get your refund by a paper check or a direct deposit. And you cannot say that if you do a bank product, you'll get your money any faster than a direct deposit. That is a big no-no. Probably going to be in the next page. ERO must accept any direct deposit election. So you can't tell them, we don't want you to deal with Bank of Hawaii. We want you to go to First Hawaii. First Hawaii gives us a bigger kickback. Wrong answer. That will get you thrown out of business. And what happens? You get a reject. Okay, you got 24 hours to correct it, so you got to try to find the guy. What happens if he gave you the wrong phone number? Boy, do we have that happen. So, especially in the old days, I was doing 16,000 tax returns.
Wow.
And we'd do 100 a day in one office sometimes. And they were all people wanting to get their money really fast. Do you guys remember what refund anticipation loans? That we used to have those 10, 20 years ago. That was the bread and butter of the business. H&R Block and myself, that's what we did. And they would come in and give us fake phone numbers. They weren't fake. They might be their cousin or their uncles because they didn't have a phone or whatever, but they wanted the money, and the rule was you gotta have a phone number. So they give us the wrong phone number. Then all of a sudden we call up Cousin Louie, and Cousin Louie either wouldn't be there, or Cousin Louie go, who? I don't know that guy. So you would have to, the answer is, you gotta try to get in touch with them in 24 hours. And if they gave you a bad phone number, it wouldn't work. Usually, in our case, we were giving them money within 24 to 48 hours. They would be calling us. And we go, hey, we tried to call you, you give us a bad phone number. Get us a good phone number that we can check, or we can't give you this money. That's a bank rule. But that's... Okay. So rejected refunds, you need to know this. When the ERO advises a client that can't be filed, the ERO must provide the taxpayer with a rejection code, an explanation of the rejection code, and a sequence number of each rejection code. Your software provides that to you. What usually happens? We mail in the tax return if they can't. Especially if it's the one where, oh, your son somebody's already filed your son. He doesn't know about TurboTax by chance, does he? Then they call up their son and go, oh yeah, the son's away at college. Oh, well my friend showed me how to do that on TurboTax last night. Choke the friend. Okay, refund anticipation loan. That means the IRS is not a party to this. They want you to make sure you say that. A refund anticipation loan. You come in, you file your tax return with us. You fill out paperwork saying the refund maybe it's next door. There's a big, did you hear a big thump?
Yes.
Okay,
Yeah.
good. Wasn't just me. So, you ask the client, oh, would you like to have your money tomorrow? We can loan you the money and get it to you tomorrow. Would you like that?
So you write them a check or give a cash?
Yes.
Yes, check.
Yes, you write them a check through your computer, or you directly deposit it into their bank account. You don't give them cash. There was, Jackson Hewitt did that about 10 years ago, 1 year. They put this cash machine in their offices. And so you turn the check into cash for an extra fee.
That's it.
But they had some
Turn
problems.
your check into cash.
One of us got robbed. That was probably the big problem. Could you see anything wrong to have it out in Nanakuli? a machine that just spit out money?
That's it.
Okay. So refund anticipation loan. The IRS has no involvement. A RAL is not a substitute for a faster return. They can't get the money any faster, which is not true. They can get the money, they can't get the refund any faster. Because they get the money as a loan the next day. The refund comes the same period of time.
How do you get their refund?
We loan them the money. So a guy comes in, he gets $5,000 refund, all earned income credit, I might add, because he's claiming his 3 nephews. That's why due diligence is getting so strict. So he's claiming his 3 nephews. He brings in like a deck of cards, everybody's Social Security number. Well, these 3 didn't work. Let me try these 3. Let me try these 3. By then, you as the taxpayer should be aware, and you better not let him keep doing that. We did have that happen, 10, 15 years ago, more than once. And I have one of my ex-employees, he's got his own business now. He was going, he makes that joke regularly still.
No, how do you get your money back? So you front the money as a.
Oh, okay, me.
Right.
Okay,
Your
I
client.
prepare the tax return.
Uh-huh.
At the same time, I say, would you like to have a refund anticipation loan? Would you like us to loan you the money? He goes, yes. So I type up all the documents, he signs everything, then we file his tax return. In the process, we say your tax refund is going to be directly deposited into the bank account that we set up for you with our bank. So your refund is now going to our bank into your account, and when it gets there, all the fees and monies are going to be subtracted from the refund before you get any refund. So let's say we file, here we go. Here's the client. He comes in, signs everything. He takes his paperwork. We file the tax return with the IRS. The IRS says, okay, we'll give him his money. We will send the money to the bank over here. But when they say to us, we accept his tax return, we get an acknowledgement the next day, which also we send to the bank. The bank says, okay, the IRS is going to send him the money. We will loan him the $5,000 minus the fees. Okay.
So it's like Hank's tax service, care of your client name, like a client holding account.
Okay, so the client will choose. Do I want the money to go to Hank's tax service? I print him a check. Or do you want it to go to your bank account? Either way, all the fees have been deducted, so I now get paid my fees. Okay? And the bank gets their fees. Now, he gets, let's just say it's $500. He gets $4,500. When the IRS sends the $5,000, the bank actually, I don't get my money until it gets paid. So the bank sends the 5,000, then I get paid. The bank gets paid back for all the money they gave out. So I didn't get my money until the IRS sent his money. So the IRS said, in those days, the IRS would also send a code out saying he's not going to get his money because he owes child support, or he owes a student loan, or he owes the IRS money. When that was called a direct deposit indicator. When that code went out, if it says he's not getting his money, the bank gets that code also, and they go, I'm not going to loan you any money. And even if the bank was only going to say he only owed $100, they're not loaning him any money because they don't know how much it is. So he doesn't get the loan. He doesn't pay for the loan. But the bank has at least a fee in there for just doing all this. And we get our fees. Okay, so he got part of his money. Instead of getting $5,000, he got $2,000. You subtract the $500, he gets $1,500. We get all our money, the bank gets their money. But he has paid off his $3,000 he owes to child support, student loan, the IRS, or whatever. So everybody gets paid. The one that doesn't get paid is if he's got a brand new student loan that hadn't been processed, and it gets processed right in the middle of all this. Or the IRS goes, wait a minute, these 3 nephews you've got,
They're not it.
could you send us some documentation showing that they live with you? And then his tax return is held up, and he has to send them this documentation. Well, Bozo over here doesn't ever do that. Then he's never going to get this money. Then in a month or so, he'll come to us and go, oh, does this letter mean anything? And we go, yeah, if you ever want to get a tax refund again, we've got to get this straightened out. So we help him do this. H&R Block tells him, just go follow the information on here, go get it fixed. And he never does. Now what happens then? He's now filed a tax return that's been audited, and the IRS says, you don't deserve that. So they may take and say, for the next 2 years or 10 years, you can't claim any earned income credit. Right? Is everybody familiar with that? So now he's in real trouble because then he can't use his niece and nephews. If there really are his nieces. They could be his niece and nephews, but they may be living with their parents down the street, and the parents have 6 kids, so they don't need those 3. That's what due diligence is about. You good now? Got it? It was a money maker.
Yeah, I'm like, how, but you're not loaning them money. You're working with a bank to loan them money.
Right.
And
It's
you're
actually illegal for me to loan them money.
so you're getting part of the commission. Well,
The first year they started that back in the late 80s, the CPA that got me involved in this, he did that the first year. He loaned the money through his bank. He didn't understand about direct deposit indicator. He loaned everybody the money. He lost money that year. But the next year he figured it out. And that's how I got involved in this. He called me up and goes, hi, I lost a bunch of money last year. Would you loan me money? And also, I would like for you to be my manager in San Antonio, Texas. Porque yo hablo poquito español. En medio de la gente ahí necesita hablar en español. Half the people in San Antonio spoke Spanish, and we had to do tax returns in Spanish. That was a little challenge because my Spanish is not very good. Now, 30 years later, it's really bad. But then, I pretty much could get by, and I'd have a dictionary. And when they weren't asking complicated questions, there weren't anybody filling out a 3115. In fact, in those days, I didn't even know what a 3115. I wasn't even an enrolled agent, I was a accountant that just switched over. Okay. We're having some fun now. All right, real quick. The fee must, if you have a fee for your customers for a refund anticipation loan, it's gotta be the same for everybody. None of your fees can be based on how much of a refund. We've already gone over that somewhere else. Oh, the tax preparer and the financial institutions may not be related. I can't have my brother have the company that's loaning him the money, or I can't, something like that. It has to go through a financial institution. Okay, advertising, you can't lie, cheat, that kind of thing. You gotta follow consumer protection laws. You can't use the word in your company name as IRS or Internal Revenue Service. You can't say Hank's Internal Revenue Service or Internal Revenue Service or us. Can't be the name of your company. Or you can't imply that I can get you a better deal because my brother works for the Internal Revenue Service.
How about Internal Revenue Center or something? No.
That's probably not. That's too close. Okay, advertising. It can't. You have to. It has to be. It can't be just over there. It has to. You have to make a copy of it, and you got to keep it for 36 months. And it says here, although it says 36 months, right below it says publication 3112 states that the provider must retain the records until the end of the calendar year. If you do anything on paper, like you send out advertising as a flyer or something, then you have to have a list of who you send it to.
So you can't use like Snapchat.
I don't even know what that is.
It's like a social media, but it disappears within, I don't know, 1 hour.
Sure, but do you know who you're sending it to?
No.
Well, your friends, but it says you gotta keep a copy of.
Yeah, okay, so you make a copy of what you're gonna put on Snapchat and you keep it.
Oh, like a physical.
Yeah, physical copy.
Okay. Not the medium of.
No, because you can't keep a radio
Yeah, I
commercial
don't
in
know.
the air. I have,
Well, you can record
on
it.
my computer, I have all the radio commercials every year. They're almost the same, but you keep a copy of them. On all radio stations, and pretty much, they were all the same anyway. Same thing with TV commercials. I make one TV commercial and give it to all the different stations. I keep a copy of that. Business taxpayer, just read it. There's nothing I can tell you. Electronic payments. Does everybody know EFT, TPS? Okay. Remember that they got to be scheduled at least 1 day in advance. That's the only thing. Yeah, I think it's the best thing since sliced bread. Sanctions. Okay, you guys got to know level 1, 2, and 3. Just one is level 1, no adverse impact. Usually it's a slap on the wrist. Written reprimand is what they call it. Level 2, adverse impact, you can have a 1-year suspension. Level 3, you can get a 2-year suspension. It would be like if you had a level 2 and you did it over and over again, that makes it a level 3. You can have, if they deny you, most denied applications and sanction providers are entitled to an administrative review. Just basically read that. The only thing is, if you get a federal court order injunction, then you can't get back into business.
You can't.
179. Revoked providers are not entitled to an administrative review. if it's official because of a federal court order enjoining filing of returns or federal or state legal action. That means you've done a really bad something or another. After you get that, I don't know that you can ever get back in. Okay. That is all that we've got. Now, would you like for me to go through a quick review or get out of here early? I'll go through the first chapters, the first 6 real quick. If you're going to be taking the test and what you guys, you got little pens or paper to write, mark all this stuff. We've already gone through this. This is the kind of stuff that it's not like doing problems that I can help you with. This is, you just got to read it. And all I'm going to do is hit the highlights.
What page are you?
I'm going to start on page 7. The rules that they're going by that are in Circular 230. I used to read that one every year. I haven't lately. Practice? Well, actually I do. If I need to know for sure an answer, go read Circular 230. That's the real, what we're going for electronic filing especially. Or for if you're an EA. Okay? What do you got to practice before the IRS? What is it? Number 3. Number 4, what it's not. Preparing a tax return is not practicing before the IRS. Furnishing information is not. Appearing as a witness is not. Those are questions you get. Who are practitioners? CPAs, attorneys, enrolled agents, enrolled actuaries, enrolled retirement agents, plan agents. Okay? Who can do partial, some of the things that can, what is it? The AFSP. Anybody can represent themselves in front of the IRS. If you're a full-time employee of a corporation, you can, or a company, you can represent that company.
And a brother or sister?
A close family member can represent their close family members. That would be father, mother, brother, sister, son, or daughter. Your brother-in-law can't. Okay? And if we go to page 10, there's a list right there. We just went over it. Who is subject to regulations of any practitioner who for compensation prepares or assists in the preparation, claim for, is subject to the duties and restrictions of relating to practice. Okay, as well as up to the sanctions. So what happens if they steal, cheat, or lie? They could be subject, any tax preparer can be subject. And who may not practice? Who's in charge of oversight? The Commissioner of the Internal Revenue Service or his delegate? Everybody knows what P10s are. Conflict of interest, we've already gone over that. Relying on information furnished by clients. It's my favorite loophole. A practitioner inviting a client to take a position on return that may not rely in good faith without verification of information furnished by the client. However, the preparer, so what does that mean? You can rely on information furnished by the client, but you cannot ignore the implications of the information. You must make reasonable inquiries. So if that guy tells you, I drove 40,000 miles for work this year, and you go, whoa, that's a lot of miles. How did you have to ask, how did you do that? What proof have you got? And if he goes, I drive every day from Waimanalo to Makaha and back. What would that be? That's 100 miles, we'll say. Okay, could he do that 365 days? That's 36.5 miles. That's not quite 40,000. But, you know, he goes, oh yeah, some days I do it twice. You better document it.
I'm sorry, but that doesn't add up.
I actually had somebody do that once, been 20-something years ago, and I didn't do his tax return. One of my employees was doing it, and he came and got me and goes, I need your help. So we went over there, and this guy was a yard man, and he started at some number like that. He's going, yeah, I drove close to 50 or 100,000 miles. Maybe it was 80,000. But, and then he started with, and this is how much was worth. So we going, okay, how many miles a day, blah, blah, blah. Anyway, it got down to like 12 or 15,000. And then, okay, we're good. But we had it all documented by then.
I had this guy today, he brought me his spreadsheet with all the money he made, right? But it all said credit card. I says, don't you take checks, cash? He goes, oh, I don't keep track of that. Hello, anybody home?
Don't tell me this.
I know, I did, I went like this. Don't tell me that. 'cause
No,
I need to go back.
basically, you need to say to your clients, especially before you get started, anything you tell me I cannot unhear. If you tell me something, I cannot unhear it. Just to give you a heads up.
Heads up.
Okay, conflict of interest. Everybody, we've already gone over that before. And there's all the rules. Basically, all you can do is read that. Diligence, just what we were talking about. Due diligence means to be exercised to determine the correctness of oral written testimony. Okay, diligence is presumed if the taxpayer relies upon the work product of another person. You get a K-1 from another tax preparer, you can rely on that. So information, if somebody from the IRS asks you for stuff, you've got to send it in promptly. You cannot delay and delay. If they ask you and you don't have the information, you have to, this is another one that's a question a lot of times. If you don't have the information, you have to ask your customer, where is the information? And you got to tell them you've got to provide that information. You don't have to go out there to the other person that has it and do anything. But I would say to the IRS, I don't have it. He said that so and so had it. I can't help you. I don't have it. You can't have assistance from a suspended or disbarred practitioner, right? Negotiating clients' funds. Never, ever, ever cash one of the client's checks. You can put it in his bank account. That's legal. But you can't say, here, there's your refund. I'll put it in my bank and take my fees out and give you the rest. No. They're going to ask that too. You can't charge an unconscionable fee. I've never met anybody that can tell me what that is, though. What for one guy might be different for another. I've claimed H&R Block is doing that all the time, but then nobody pays attention to it. Nobody hears H&R Block. for a couple of years there, I had them I got one person through the e-exam, and she started telling so I had 3 or 4 H&R Block people, and I couldn't make jokes about them. Okay. A contingency fee, you need to know that. Return of client records, I don't care if they didn't pay you or not, you gotta return them. Everybody knows that, I bet. Advertising, just read the advertising. Best practices, supervisor responsibility, sanction and disciplinary, you need to know this. The key one they trick you with is conviction. You can't be indicted, you're not guilty of anything. You have to be convicted. So they trick you and say, as the answer, one of the answer is, you were indicted for a criminal offense or something like that. It's the word conviction. There's a whole lot of things you can't do. Circular 230, basically, they're gonna, if you don't follow the rules, they can have the complaint begins a proceeding. A proceeding is begun by filing a complaint. So the IRS has to file a complaint. They got to send you a copy. They got to say clear, concise statement of what they're charging you with, and you get a chance to have a defense. Just read this. Basically, just reading all of this. I could spend forever. Continuing education. If you're an EA, what is it? Somebody who was going over that today? Edna, maybe? You were going over what do you got to be an EA? You got to have every 3 years. You need 72 hours. 2 hours each year of ethics. Okay, as part of your 72 hours. You have to have a minimum of 16 hours a year. But if you divide 72 by 3, that's 24 hours. So you need to be taking about 24 hours a year. You can take it 1 year, a minimum of 16, and the next year you might take 40. You know, the next year you might take 20. 40, 20 is 60 plus 16, you're more than the 72.
So 72 is the total.
72 is the total. The minimum in any year is 16. And if you divided 72 by 3, that's 24. And besides that, you have to have 2 hours every year of that 16 has to be ethics. And you have to have ethics every year. Those are questions they're going to ask you. Identity theft. The form is 14039. They may ask you that. Okay, so that would be Chapter 1. Chapter 2, preparers and penalties. Defining a tax preparer, basically you just need to read that. Primary responsibility, who is the taxpayer? And when we get to the penalties, if you're the owner and your taxpayer does something wrong, you have to make sure that you told him the rules and like especially for due diligence. Or you could be also responsible to get the same penalty. So let's just say that you every year tell your employees, you have a meeting with each employee and they go, you give them a handout and say, these are the rules for earned income credit. And you've got that documented. Or I make them take, there's a EICT toolkit and you go make them take that test. That way you've documentation that they know the rules for earned income credit. They know you can't put your cousin down as your son or some other such thing.
So you don't review everybody's tax
I do
return?
5,000 tax returns. No, and neither does any other tax. Maybe some CPA firms that have lots of complicated but very few tax returns. But how do you review? I used to do 16,000. That's in 7 offices. That wouldn't work very well. And the answer is no, I'm not required to. But I'm required to teach the people the rules so that they at least know the rules.
So you're not ultimately responsible that tax preparer is as long as you show that.
I'm ultimately responsible to make sure they know the rules. Okay, and then I cannot. So if they don't follow the rules, and I've already gone over that with them, they can't find me for what that other preparer did. Now, if I knowingly let that preparer get away with that, I'm now responsible again. But that's kind of dumb on my part. Okay. The following are not tax preparers: employees of a company, a person who prepares a claim in response to a notice of deficiency, anybody that just types in the information, mechanical assistants. The preparer's position on law, substantial authority, you might want to look at that and review it. Errors and omissions. Okay, a practitioner discovers that a client made an error or omission from any document filed with the IRS. He must notify the client of the error, not the IRS. They're going to have somewhere in there, you have to notify. No, you don't. You have to notify the client and explain what the penalties are, the repercussions. Must advise the client of the consequences of such an omission. So you got to tell him you left off $100,000 of income. You could get fined big time and penalties. And now, you've already filed the tax return. You don't do that. But now, what happens if you see his tax return from last year that he did on TurboTax? Then he goes to you, oops. You go, okay, it doesn't affect this year's tax return. So I'm telling you, this is what your penalties can be. This is what you're wrong. You're responsible for doing that. On the other hand, if the error on that tax return affects this year, I either have to do this year's correctly, which might snitch him off to the IRS, or I got to walk away. That's my opinion. I would not do the tax return this year wrong if I knew something last year. He took too much depreciation last year, and because of it, he doesn't get that same amount this year that if he'd have taken the right amount. Does everybody, you see what I'm talking? You can't take the depreciation if he already took the whole amount or too much. Okay. But if you do it the right way, the IRS may notice and they may do something like go back and audit his last year.
So if you didn't take as much depreciation to kind of even it out, that's a red flag.
Maybe, you know, it could be so immaterial they see that it's funny, but they don't do anything about it. Yes, but that's what you would have to do. He took too much last year, and let's just say, make it easy on me, straight line. It's $10,000, 5 years. He should have taken a half a year's worth of depreciation the first year, and then $2,000 each year. But last year he took 4,000. Well, it doesn't matter. Last year he should have taken 100. So so all this is mute, sort of, unless he took the option out of taking 100% depreciation, and he did it on some things, but he didn't do it on others. Well, so then you got to do it the right way. Please. Now, if you guys want to come to the NATP State Conference convention that's going to be in the middle of November, I'm going to be speaking on depreciation.
Where is it gonna be?
It's going to be at the Hilton in Waikiki.
Oh, yeah, give us.
There's going to be one that's going to be about state, and we'll have more state issues. And then there will be 2 days after that that's going to be a national speaker. The first day is just what's new in taxes. The next day they're going to have several things, but a big portion is going to be Schedule C's and Schedule E's. And what are the new rules? One of them will probably be depreciation, because that started new this in 18. Everybody knows you take 100% depreciation unless you opt out. And if you opt out on all 5-year property, you can't take the opt out on this one over here and go ahead and do this one down here. That's what I was actually talking about. Or else it messes up all the other years. Okay. Accuracy, all your penalties, you guys need to know these penalties. I'm not going to go over. Substantial understatement, they're going to have penalties, are going to be there. This is the book that has the most penalties. Every book has penalties. They want you to know the penalties and to make sure so you don't say to them later on, oh, I didn't know those penalties. Willfulness. What is willfulness? It's a penalty of greater of 5,000 or 75% derived from the tax preparer. And in that one, willfulness implies from disregarding information furnished by the taxpayer or other persons ignore the implication of failing to make further inquiries. So, they just told you they had 40,000 miles, and you didn't ask any questions. Or they told you, yeah, I bought that house for $1 million, and you go, if they told you that, that's not, in a Y, that's not even a high number. That's an average house. But in some places, if it was a house in Mississippi, it better be a nice house. They don't have houses. They're more like $100 grand per house. All right. Books and records, you got to keep. There's a bunch of things that are in the reasons for fraud. They call them badges for fraud. That's just a whole list. Conduct of tax preparer, indications of fraud. There's a whole list. Methods of concealment. They're going to give you one question about some of that, maybe. Tax return disclosure statement. They call it 8275. It's used by the taxpayer and the tax preparer to disclose items and positions that are not otherwise adequately disclosed. You're going to use some funky method of doing something, you can disclose it. What does that mean? Then you don't get any bad penalties, but you're telling the IRS what you're doing. And so they get to look at it. So, tax shelters, they used to do a lot about tax shelters. They don't, but you still gotta read it again. Generally, a penalty will be imposed if a person required to register a tax shelter fails to register the tax shelter. $500 or 1% of the aggregate amount. Representation, that's on page 69. What is that? Okay, so you can who can you represent? If you're a CPA, lawyer, or enrolled agent, your representation in front of the IRS, you can represent anybody doing anything. If you're not one of those guys, your representation is limited to in front of who? In front of, yeah, the examining agent. Okay. Recognized representative, we've already gone over this, but just, you gotta know that, the annual filing season program, they're gonna ask you, what can they do? They can only represent somebody that they did their tax return for in the year that they took the test, and they're, one of the little guys, the AFSP. So they had to have signed the tax return and passed the test. What are the things about the POAs? You need to know all that. If you've been, have you guys been using POAs a lot, everybody here? If you've been doing this a lot, this will just be a piece of cake for you. So you can only have a POA for the years that you asked for. You gotta have it signed by the client. It's got to be signed by you. If you're a married couple, now you've got to have a signed POA from each married person. You can't have one with both their names, but you can for the state. An 8821 is for people that need to, is a tax information authorization, so you can get tax information. For people that aren't EAs that want to just get the tax information, this is good for them. Multiple representations, you can only have 2 designated representations at a time. It does not apply to the 8821s. And what if you've got a POA or a TIA? You can generally perform all the acts that the taxpayer can perform. That's not for TIAs. There's a list of everything, POA requirements. What you can do if you've got a POA, it says receive. You can receive the check, but you cannot endorse or cash it. You can put it in their bank account for them. That's when they're gonna ask, they ask every year. They wanna make sure you know. You can't go cash somebody's check. A lot of preparers used to, there was a guy down here at the, maybe it was Mayor Wright, one of the housing places down there. He lived in there and he had a lot of clients. He would put his address and have all the checks come to his address. Then somehow he would get the check and they would go with him to the bank to cash the check so that he got paid. Just saying. I think they caught him and they put him out of business. We kept asking people, and that's what they told us we're going on. They can't do that. Does everybody know what a CAF number is? You can go get you a CAF number, then everybody that you get power of attorneys, you ask the IRS to put that in your CAF, and so you have a record of who you have power of attorneys for. And now the IRS pretty much asks you every time you call in, what's your CAF number? And they check to see if you have a power of attorney. If I don't have a power of attorney, instead of going, getting all that, I would just, if the customer's there, I'd just have them sit there with me, we call, and have them over the phone give me permission to speak for them. That works just as good. What's that?
The cash center.
I don't know
Oh,
what you
the
said.
CAF, yeah, well, it's faster sort of. If you've already got a power of attorney and it's in the CAF, that's faster. Because then the IRS just asks you, what's your CAF number? Who is the guy you're doing this for? What's his social security number? What's his name? And that guy looks it up on the CAF center and goes, okay, you're good. What years are you good for? So I have to, because I can't remember that stuff, I pull out the 2848 and look on there and goes, okay, I'm good for 14 through 18. I usually take the years they're asking for, add something on the back end, and add one on the, so I'm at now, if I'm thinking, I will add 19. Because just now, a week or so ago, I finished this guy's tax returns. He says, I'm going to Michigan to do something. And when I get back, we're going to finish 18. Well, I've gotten all of his transcripts for all those other years because he has like 20 1099 miscellaneous.
Oh, Lord.
And, well, there's nothing, you just add them up. They'll take 5 minutes. But I didn't get 18 because when I did this a year or so ago, we weren't worrying about 18. So now I went to do that, and the IRS told me, you're not on there for 18. You've got 12 to 17. So I got to wait till he goes back, fill out another 2848, and then get it in there. Okay, but that's the worst problem I got. That's not bad. He was so many years behind. He's now caught up to 18, but he still has to give me all the expenses. So it doesn't matter. Accounting methods. What we got to do? Don't worry. Everybody knows what a cash and accrual and a hybrid method is. You don't? Fine. They're only going to ask one question or something. Everybody knows the difference between cash and accrual, right? Examination of returns. How do they examine the returns? You need to know the DIF score, the DIF, D-I-F. The higher the score, the more likely you're going to get audited. What else do they get money from? Third parties, such as you forget to put a W-2 on it, or a 1099-R, which is my favorite. Oh, do I? But that was my money. I don't have to count that, do I? Or the other favorite is that they get it from an individual, like an ex-spouse or ex-partner. In other words, you were doing cheating on your tax returns, you get a divorce, the spouse snitches you off. Or you have a partner in a business and you cheated the partner or somebody you're doing business with, they turn you in. Okay. Okay, so your rights have to be explained. What publication? Publication 1. They sometimes ask that. Taxpayers can be represented by a federally authorized practitioner or a person who prepared and signed the return. Okay, so you can change the location of where you want. Let's just say you filed here in Hawaii, but you've moved to California. They want to have a in Hawaii, but you go, I live in California. You can do that. They have to let you do it. But they can't, you don't have to do this. You live in California, but your tax practitioner lives in Texas. You can't move it for his convenience. Okay? All the rest of this stuff, an examination that we're going through, basically just reading it. You get a revenue agent's report, you get 30-day letter, okay? Then if you don't answer the 30-day letter, they send you a 90-day letter. And If you don't answer that, they go ahead and process the tax return. They have all these CP things in here. I basically don't see any of them but a CP 2000. I see that one all the time. I see some, where's the 504? They don't even have that one. Okay, I don't know if they're gonna ask you any of those CP numbers except for the 2000. Audit reconsideration, we already talked about that a little. So, they go through, they do an audit, you don't answer, you don't respond to any of those letters, and 2 years later, they send in you big bills, and they go, they want to take your possessions or something, they levy your wages, or they levy your bank account, or they do something. Then you go in and go, wait. Hold on, and you can do an audit reconsideration. There's a bunch of rules for it. Appeals within the IRS, everybody knows you can, first thing you get audited, where's the first appeal? You ask for the guy's supervisor right then at the audit and go, hey, can I talk to your supervisor? I actually had that once work. I didn't get everything I wanted, huh?
What does that do?
Okay, so the auditors, in this case, it was a guy and a girlfriend. They made a contract together. He loaned her money. After he loaned her money, they broke up. He had had it all written out, covered all of his bases, done it all right. Then the auditor goes, no, this is your girlfriend. I'm not gonna, this is not a real loan. But he did everything, followed it. So I go, nah, she was just, there was a lady auditor and she just didn't like this guy. So we went to the supervisor, and the supervisor heard everything, go, look, we did everything the way we were supposed to. So she goes, okay, and she gave him part of what he was asking for. And I suggested that he go ahead and take it, and he did. By then we'd been there for a couple hours arguing, and he was worn out. I was having fun. I rarely do I go to audits. I went to one just a month ago, and I wonder why they were doing this. And come to find out, it was an audit to train somebody. They had just picked us randomly. Because this is a guy that, it was the lady, one family. The lady had become disabled, and it took 3 or 4 years for her finally to get her Social Security, and she had been getting TDI when she should have been getting Social Security. So when the Social Security came, she had to give back, because she had already been getting the money, she had to give that money back to the TDI people. So we put that on the tax return, she gave it back and explained that, and the legal fees that went with it. And so we had all the documentation, so it was a short audit, and they had no changes, so they let us go. They could have, technically, only 85% of the legal fees should have been able to have been written off, because only 85% of it was taxable in the years that they put it on their tax return. But he told me he was gonna do that, but they just let it all go. So, it was fine.
So if that client cashed the TDI checks, then she would be in trouble. So
She
got
did
Social
cash,
Security
she got TDI for 4 years. She should have been getting Social Security, but Social Security didn't give her the money.
Right.
So she was getting TDI, but when she finally got the money, she shouldn't have been getting TDI, and she had to pay back.
She gave it back.
Yeah, but she'd been getting the money all along, so she was still back to even.
Right. But if she kept it,
And then-
she would have got in trouble.
Yeah, well, the people from TDI was an insurance company. They would have probably, they would
You're
have sued
talking
her.
about the IRS.
The
auditing.
IRS audited the tax return because when we gave back the 36,000, we put it on the tax return on Schedule A. No, I don't remember.
But you deducted
But we
it
put it
out?
on there, huh?
You deducted it out?
Yeah, we deducted it back
Okay.
out. Because, she had been writing this off all along. And she should have, and she had been putting the money on her tax return all along. So she gets to get back on it. And then, but she hadn't paid tax on the Social Security. It came out to a break-even point. All right. Does everybody know what TEFRA? That's if you have a partnership. They're now auditing partnerships at the partnership level as opposed to on each individual tax return. And just basically read that because you don't know as much as me. Under examine, under chapter 4 on page 100, it has all the tax courts and where they go for which one. They had a question under this. The tax court is U.S. Circuit Court of Appeals. The U.S. Court of Federal Claims goes under the U.S. Court of Appeals for the Federal Circuits. They sound like the same thing to me.
Yeah.
But there was a question like that. I don't know if they'll do that in real life. If you go to the tax court, you don't have to pay the fine, or you don't have to pay the amount you owe before you go to tax court. If you go to either one of the other two, you have to pay up front before you go to those courts. And then you apply with I think it's 433. I don't see it, but you apply to get your money back. Okay? The tax court has jurisdiction over only the following: income tax, gift tax, estate tax, and employment status determination, certain excise taxes. But they don't have anything to do with employment taxes. Under small claims, the $50,000 limit, and you get no appeal. They may ask you that. Okay, there's acquiescence, we just went over this a week ago, didn't we? So, you guys, the rest of this, the collection process, I can't tell you anything I didn't tell you last week. And anybody that wants to go over any of this stuff, now my season is over. It's gotten quiet compared to what it was. I will be happy to give any of you guys a couple hours. All you gotta do is call and make an appointment. Say, if I'm not here, tell the receptionist, which is Mark, or the other guy, Sam, just say, book Hank for 2 hours. No problem, yes.
What cheat sheet for a cost basis?
I do. I gave you one.
Did I have one?
Yep.
I'm so confused with when you use what.
Okay. Does anybody else want any cost basis, installment sales? Remember we went through all that stuff? Now that's something you could use your 2 hours for. Because that's more challenging. This kind of stuff, all I can do is read it to you. Does anybody need installment sales?
I still have it still.
I'm gonna try this one even though I know I'm not ready.
Bye guys. Bye.
Bye, everybody. Okay, next week, are you ready to rock and roll? We're gonna do the first 2 chapters of part 2. From now on, it's gonna get more challenging.
Thanks.
I thought it was starting November
Okay.
1st. No?
So you can read the first 4 chapters.
Wait, is it next week or the
Next
week
week.
after?
Huh?
I thought it was November.
I thought it was November. I thought
You wanna take a week off?
Yeah.
Does everybody wanna take a week off?
I do, but.
I don't care,
too.
just, you gotta decide,
thinking
everybody's
that-
gotta stay together.
Does that mean it's gonna get more intense for chapter and for
Well,
two?
you'll take an extra week, we're gonna do the first two, look, it's
How many-
gonna be-
So it's gonna end in like mid-November, right? I don't wanna.
I just like to try this, even though I'm not, I know I'm not.
why are you taking the next week off? You got too much to do?
No,
You're gonna study for the other test?
I was gonna study for this one. Even though I'm not ready, I'll take it. I just
Huh?
wanna see where I'm at.
What do you guys wanna do? Do you wanna go on or
What do you
not?
wanna do?
I don't know, it doesn't matter,
Yeah, I'm okay.
doesn't matter to me.
Okay, we're starting,
you're
okay,
taking it-
we'll take the next week off, and then that means,
Right,
well, I've already told some
She
people, oh
wants to
wait,
take the test, that's why.
we got to, cause there's other people coming.
For
Oh,
next
God,
week?
start.
Oh,
Yeah,
okay.
I've already
Alright.
told them we're starting next week.
Okay,
Okay.
got it.
So, 1 and 2,
1 and 2 next week.
yeah, income and foreign, well, entity types, methods and periods.
Oh, that's me.
That's good, that's important.
Thank you.
Income, foreign, oh, I forgot foreign.
I'm right. When do you take, you're taking the
Foreign,
form,
yeah.
right?
I wanted to take it last month, and then